Hello again, fellow BeachBum traders. Thank you for joining us for part 2 of our weekly trading game plan for the trading week of January 15th through January 19th, where we'll be selecting our top swing trading stocks to watch, stocks in our bullpen. We'll look at our shopping list. We'll talk about dividend payers and how you can use dividend payers to generate additional income while you're waiting for your top swing trading stocks to set up, and we'll also talk about some option strategies, and we'll probably also get into our series on how to trade biotech stocks. So got a lot to cover, so let's get started. Welcome, Brian Moritz. Thank you for joining us. Hope you're doing well. So here's our Google document with our notes for part 2 of our weekly trading game plan for the trading week of January 15th through January 19th. We keep our notes for our weekly trading game plans in publicly accessible Google documents. Our notes documents contain links to bonus video, tools, and resources we use to select our top swing trading stocks to watch and our other trading strategies. If you have not already seen part 1 of our weekly trading game plan for this week, titled How to Make Money Trading Bitcoin ETFs Approval, we would highly recommend you also view part 1, as this contains our market analysis, trading strategies, trade ideas for the trading week of January 15th through January 19th. We keep all of our notes documents in a publicly accessible Google Drive folder, so you can refer back to the notes for part 1 of this week as well as for previous weeks, and you can find a direct link to that Google Drive folder also in the description box below. Welcome to Ricky Khan. Thank you for joining us. Hope you're doing well. So we didn't make any changes or any real trade updates for this week. We didn't make any changes to our positions this week. Just as a quick reminder, if you would like to get alerted when we do enter or exit a trade, you can get access, get email notifications when we enter or exit a trade by joining our Patreon at any level. And that also would give you access to several alerts channels in our Discord. So I also have price alerts set up in Thinkorswim, and those get triggered and then automatically posted in our Discord. When those get triggered, if we follow that up with a trade, then I reply to that trade in the Thinkorswim channel in our Discord. If it's a trade not directly related to a Thinkorswim alert, then we also have a trade alerts channel in our Discord, and I would post our trade there. So again, if you join any level of our Patreon, that will give you access to those alerts channels. We also have automated alerts that will help you see when stocks are moving, breaking out, etc. We did a previous video and talked about those alerts, and that's in this additional alerts channel. So again, it helps you see sector rotation when stocks are breaking out, moving up, near a buy price, and we'll go into more detail on that alerts channel in the future. But again, if you join our Patreon at the All Access or VIP level, that will give you access to that additional alerts channel, and you can hear more about how you can use that to get alerted when stocks are moving, breaking out, etc. in the bonus video link in our notes. So we'll jump right into our top swing trading stocks to watch list. Welcome, Sydney Osborne, Walter Lyons. Glad to see you all here. So first I'll go over our updates for our top swing trading stocks to watch list for this week, and then we'll jump over to Webull and look at the charts. Okay, so the first one on our top swing trading stocks to watch list we added, I believe, last week, which is APLY, which is the yield max dividend payer on Apple. So It went ex-dividend on the 5th. Again, we're watching for a dip in Apple to buy in and hold that APLY, collect the dividends, get some price appreciation in Apple. You can hear more about some of our analysis on the Yield Max ETFs, and you'll also see we're also adding TSLY to our watch list this week, and I'll talk about that more in a minute. We've had FAZ. Yesterday we talked about FAZ and FAS, which are the ETFs to long and short the financial sector. Thought maybe we'd get a pop on the big bank earnings. We didn't really get that pop. The big bank earnings were a little bit disappointing. But if we were to get that pop, then we would watch for a top in FAS and then short that top or resistance with FAZ. Again, we didn't get that big pop in big bank earnings, but if you're a nimble trader, day trader, scalper, you may find profitable opportunities in either FAS or FAZ. And again, you can hear our video on trading financial sector ETFs in the link in the notes. We're going to add FANGD, which is the short on the financial sector. And actually what I'm going to do is I'm going to bring up our watch list Google sheet, and I want to quickly jump over to our screeners so you can see in our watch list Google sheet, and I'll talk about this in more detail in a minute as well. But we have the screeners tab that we also have in our ETF sheet, and I didn't really have time to look at the technology components screener yesterday. So I want to look at that as it's pertinent to a number of these components that we're watching in our watch list right now. So we can see of the technology components, we see ARC dropped off. As you'll see, we're taking SARC out of our watch list because it's already, SARC has already run up, ARC has already dipped. So again, as you'll see, we're taking SARC based on that. It's already run up, so we're going to take SARC out of our watch list. But you see FANGU, which is the long on the FANG stocks, is running up, getting rejected off that upper trend line. So if it does push back up, test that trend line again, I think there's an opportunity to short the FANG stocks with FANGD. So again, that's why we're adding a FANGD, which is the a way to short the FANG stocks and the majority of the MAG 7, now the LAG 7. So again, there is no direct short on the MAG 7, but this is about the closest we can use to short that. Welcome to Crow, Nugam. Thank you both for joining us. Hope you're doing well. So you see the FANGU is getting rejected off the top. We see LABU ran up, got rejected off its upper trend line. If you were nimble, were able to catch that rejection, you can make some good money with LABD, which is the short on biotech. Semiconductors, not as attractive. It already had its decline, bounced off the lower trend lines, kind of sitting in the middle, consolidating. So I don't think that one's as attractive. TECL is the long on the technology sector. As you'll see, we're still watching TECS, which is the short. So if we see that bounce off the or to exuberant run up into that resistance line with TECL, then again we would be looking to short, or that previous top, we'd be looking to short that broad technology using TECS. Again, we've got a previous video on trading technology and the components of TECL and TECS that you can listen to. The overall cues, I don't think I'd rather not trade just the broad index, but again, you can long the NASDAQ with TQQQ, short it with SQQQ. But again, I think the best opportunities right now in the technology component sectors are shorting the broad with TECS, shorting the FANGs with FANGD, and possibly if you want to trade the short the biotechs with LABD. So as you can see, I've also added LABD to our watch list. So again, And if you're a nimble short-term day trader, these pairs, you can probably make a lot of money if you can nimbly trade these pairs. So you can see again, we're adding FANGD, LABD, we have TECS, and we still have SOXS. Although again, I don't think the semiconductor segment is as attractive as it was. NVIDIA is really driving it up, but several of the other semiconductors are lagging. And again, you can hear more about how we trade, how we use SOXL and SOXS to trade semiconductors via the link in the notes. So again, I thought that was interesting. We see these tech components, the ones that are bouncing off resistance, again, I think are the opportunities. If you want a long, watch the lower trend lines. You're getting pretty good bounces off those lower trend lines, so you can long off the bounce, short off the rejection. Again, for more nimble short-term traders, I think there's plenty of opportunities to make money. And again, as we saw yesterday, we're kind of in a range-bound topping market, so I think scalping short-term trading is a better opportunity. Not all that suitable to my style, but again, we have traders, BeachBum traders that trade all kinds of time frames, all kinds of styles, and I think there's plenty of opportunities for you all to make money, and that's what we'll try to help you do. So. Yeah, Ricky Khan says TQQQ, so long short NASDAQ is his specialty. So everybody's got, a preference, a specialty. Easy Mike, LabU, LabD. I know the Crows good in some of these pairs. Yin Yang, China, cold boil, natural gas. So again, you can make plenty of money on these pairs. NVIDIA, NVDL, and BDS we looked at yesterday. So the other one we've been watching is the industrial sector. So the XLI is the sector spider for the industrial sectors. As we'll see, it made a recent high, and if it pushes back up again, we'd be looking to short that pop using SIJ. So again, we're watching for top of resistance in XLI to short with SIJ. There isn't a leveraged long that I'm aware of on the industrials themselves. And as we mentioned, we're also going to add TSLY, which is the yield max dividend payer on Tesla. Tesla's been declining. As we'll see, if it reaches a recent support level, we'd probably buy a chunk of TSLY, collect the dividend for a very short-term bounce in TSLY. And it also went ex-dividend on the 5th, and we'll look at the risk-reward profiles of both APLY and TSLY also in our dividend payers Google Sheet, so we can see what kind of a net yield we can expect. We've still got USOI on our watch list. Oil had bounced up with the airstrikes in the Gulf. Oil bounced back up. I think it's probably sitting in the 73s. It's been bouncing between 70 and 75, so getting rejected off 75. If we do get a dip in oil back below 70, we would buy a chunk of USOI again. Preferably before about their next ex-dividend will probably be around the 19th of January. You can see it pays a very juicy dividend. So again, any opportunity we get to buy a chunk of USOI when oil dips below 70, we try to take those opportunities. So we'll quickly look at our watch list Google Sheet. If you would like access to this Watchlist Google Sheet, which contains our top swing trading stocks to watch list. As you can see in the watch list tab, also contains our bullpen stocks that we'll talk about and our shopping list stocks that we'll talk about. Also our sector trackers in the sectors worksheet. And as we pointed out, the screeners. So it's a one-stop shop for where I can track all of our various watch lists and screeners, charts, etc. in this one Google Sheet. And if I make any updates That gets automatically generated and updated at the end of each day, and you can get access to that Google Sheet 24/7 by joining our Patreon at any level. You can also hear our previous discussions on how you can use that Google Sheet to watch our top swing trading stocks to watch in the bonus links in our notes. So again, here's our main watch list. You can see, where they're tracking, what the current prices is, what our price targets are. Also, it's got the dividend information, earnings report information, optionality information, etc. So it gives me a quick and easy way to see where our watch list stocks are and which ones are near their buy price to focus on. So. Okay, so we'll jump over to Webull. We'll look at our charts for our top swing trading stocks to watch. Let me grab a quick drink. Okay, I'm on the stock screen on the online browser version of Webull. So here's my main top swing trading stocks to watch list. Here's APLY. Again, we'd be looking for, a dip in Apple. See, it's still relatively high, but again, I'd be watching Apple for a decent dip. I guess I could add Apple in here if we want to take a quick look so you can see how you can add stock to your watch list. I can add it to any of my watch lists. I just go into the watch list tab, I add Apple. Okay, so then we can see Apple. So it had this decline, bounced off this support. That might be a decent level if it bounces, declines back down to that support to buy a chunk of APLY. Again, I don't expect a whole lot of movement out of Apple, but you did see it did have a pretty nice bounce there. It has been beaten down recently. So again, we hopefully get some price appreciation in APLY. You can see where it descended. So again, if we get a bounce off that support with Apple, might be time to buy a chunk of APLY. Here's FAS, the long on the financial sector. Again, we didn't really get that, exuberant bounce that I thought we might off the big bank earnings. You can see FAS has been higher in previously. It does look like it's getting rejected off this R2, longer term R2 resistance level. So again, short-term trades, I think you might find some opportunities to short the financials with FAZ. Again, we would use the tops or rejection in FAS to then short the financial sector with FAZ. Again, it's going to deteriorate, so it made a recent low even though FAS didn't make a high. Similarly with FANG-U. So we see FANG-U's recent highs 245. I thought we might get a push late last week into that high. If it does come close to that high, then we'd be looking to short the FANGs with FANG-D. Similarly with biotechs, LabU and LabD, you can see again, biotechs, LabU has been significantly higher, but it recently rolled over, didn't quite make it up to that R1 resistance level. But, again, short-term traders, you can catch these run-ups, roll over, a good way to make some money. Here's land. Again, we've been watching this, trying to get back into land. Land is a REIT on farmland. I'd like it below 14. It hasn't really gotten there. Hasn't had a whole lot of movement recently. It's been kind of oscillating. But if it does dip down, if we get a sector rotation out of real estate, if bond yields push back up, push REITs back down, land is one of the REITs we like. SIJ, again, we'd want to watch XLI, which is the industrial sector spider. So you can see its recent high. I think I put price alerts in Thinkorswim at these recent highs for like FANG, XLI, etc., FAS. So if we see a pump back up in XLI, then we'd look to short that with SIJ. SOXL semiconductors, similarly, if it goes back up to that high, short semiconductors with SOXS. TECL, broad technology, again, it recently made a new high. Looks like it's trending back up. Looks like a good opportunity if it makes test that high, test that resistance level again. Again, late last week, I thought we might get an exuberant push. It didn't quite happen. So then Tesla, again, Tesla's been under pressure. Hertz, reducing their EV vehicles. They're having to close their German plant due to the conflict in the Gulf. Less demand with EVs in general. I'd be looking to see if it, tests one of these recent lows. You see it bounce pretty good off both those recent lows, support levels. So if it comes down in that area, that's where I would be looking then to long with TSLY. I don't know if it'll get all the way back down to that, 920 level. So again, we'll see how far Tesla goes down and take that opportunity to buy a chunk of TSLY. Again, very short term, hold it for, maybe a month, get the dividend, and then hopefully get some price appreciation in Tesla and then get out. USOI, again, the monthly dividend payer on oil, it's a little high right now. I'd like it below 70. The recent low was 66 something, so 67, 66. Anything under 70 is pretty good. The trick is, is oil below 70. I think the recent low in oil was something about 67.55 or so. I believe I have a Thinkorswim price alert set on that as well. So you might see some price alerts going off in our Discord when those support levels get hit, as that's my trigger to then go look at, okay, what am I trying to play off of that price alert? So I hope that all helps. So next we'll look at our bullpen stocks. If you're new to our channel, the concept of the bullpen stocks are ones that typically we're not focusing on. Now with my Google Sheet, I can essentially watch them in near real time on the bullpen worksheet or sheet in our Google Sheet. But in the past, they're not my focus. They're not ones that I think had the setup that we want, but they might in the near term. So we put them in the bullpen. I revisit them at the end of the day, look at their charts. If their setup's improved, then I move them up to our top swing trading stocks to watch list, and we put them in the game and watch them in our main watch list. So it looks like I need to add one there too. So the stocks we've had in our bullpen for a little while, CPSH, you can hear our previous due diligence via the link in the video. It's been recently released to our channel. So you can, again, hear our previous discussions and due diligence, quick take on CPSH via that video. we've been watching for another test of the high in gold, and if so, we saw it got rejected pretty dramatically, so we've looked to short gold with GDXY. I think gold's sitting at about 2050, so it's not quite up at the recent high. And you can hear our analysis of various ETFs to short gold. We looked at GDXD, DUS, DZ, GLL, and you can look at that analysis via that video link in our notes. The one I need to add, and I want to do real short due diligence on, is LXU. LXU is a basic materials chemicals company, LSB Industries. It's popped up in one of my queries. I believe we've traded this profitably in the past. So what I'll do is I'll plug this into our Google Sheet. As you can see, you can use this Google Sheet to just plug in, or you can make a copy of it for yourself, and then you can plug your watch list, your Bullpen Stocks in, and it automatically fills in the prices from Google Finance Function. So you get the white columns, the price, high, low, 52-week high, low, etc. I don't really need their name in there. Look at their chart in FinViz. So you can see here's LSB Industries. You can see it's been in recent decline. Looks like it's still declining. It's got this support level. We'll zoom out in a second. You can see it looks like it declined, in part on an earnings miss. They did have negative earnings. It looks like they will see in their finances that they seem to have a seasonality, a cyclicality to their earnings. So you can see it's descending towards that support area. See on the weekly. So it's broken down below that previous low. So again, I'd like to see it establish some support. That's why it's in our bullpen rather than in our main watch list. Again, it's been in recent decline. Looks like it's kind of oscillating around that long-term moving average. Does have some risk, some downside risk. Got some decent upside up into the, high 20s. So again, nice risk-reward profile. See, it had a severe decline back in 2016. See, one of the issues is they do have high debt. It is optionable. There's some discrepancy between their outstanding shares and their float, so they might have a shelf offering that we might want to watch out for. See, they've, earnings miss, big drop on earnings miss. So we look at their profile. They do chemical products for agricultural, mining, and industrial. Been around for quite a while, since 1968. It's a US-based. See their revenue, it's a little choppy. EBITDA, again, choppy. 161 to 376, back down to 200. So again, probably attributes for some of that oscillation. So EPS was negative, went positive, dropped back down. So when you see their EPS, their most recent quarter, that was negative. So again, that would attribute for the drop. Part of what I was looking for is some level of seasonality. So it looks like last May or so, it's uptrended some. So we'll look for some seasonality opportunities. Again, they do make money. So I also wanted to look at their chart mill real quick. Again, you can quickly access that via the link in the notes. You can see right now the setup's pretty poor. So again, that's why it's in our bullpen. Looks like the valuations, pretty good. Profitability is about average. Health is pretty good. Growth's pretty poor. So if we look at their fundamentals, again, fundamental 4 out of 10. Average score, financial health and profitability, says it's valued correctly. Doesn't seem to be growing, so the valuation's pretty good. Profitability's pretty good. Health is pretty good. Just growth is pretty low. And again, you could dig into these factors in more detail in their chart mill profile. But again, the setup right now is very poor, so we'll wait for that technical setup to improve in LXU before we put it in the game and move it up to our top swing trading stocks to watch list. And again, I'll fill in the support and resistance that are buy at and sell at prices, and we'll get a risk reward profile. So I guess I can do that. I would probably take the, let's see, it looks like it's not quite at the 52-week low. So if we take the 52-week low as the support, we could take a short-term resistance, or we could take a longer term. So it looks like that 1169 or so. 1169 is the resistance level, and then that'll give us a risk reward profile. You can see right now it's very high because it's very close to that low. See the 52 week, it's not quite a 2, so I'd prefer a 2. So I hope that all helps. Okay, so we'll quickly, as you saw the bullpen sheet in our Google Sheets. So if we look at those stocks quickly in Webull as well, we see CPSH has been just pretty flat. We're just kind of waiting for a little bit of a dip. No real rush. Looks like, it's just consolidating, basing in that area. So no rush, but if it does dip a little bit, I'd take a small position. Talked about gold, GDXU. Again, these don't track the spot gold price perfectly. Again, it's been higher in the past, even though gold made a recent all-time high. So again, I base most of that on the gold price, and that's when I would use GDXD to short. We'll add LXU. So again, you can see how easy it is to quickly and easily, I added it to the wrong one. Okay, so see how you can add it to different watch lists in Webull. And again, we can see that recent low was 772. So we'll see if that holds. If so, if it bounces up again, that might be, a halfway decent swing play. Short term, and then we'll keep an eye on if it continues beyond that up to the previous highs. Welcome, Flip of the Shippa. Thank you for joining us. The Crow, if I didn't welcome you earlier. Don't have any honorable mention. We'll look at our shopping list in a second in our Google Sheet, what I have on my shopping list. Concept of the shopping list, again, we always recommend you have a list of stocks that you want to buy, hold for any length of time. And so if we get an irrational reaction to earnings, again, we're getting into the heart of earnings season again. Some of these stocks will react irrationally and might give you an opportunity to buy them cheap. So have your list ready. Again, we just recommend you stay away from zombie stocks, zombie ETFs, zombie companies. Again, none of this is financial advice. We're not financial advisors. All of our content is for education and hopefully some entertainment purposes only, but we don't like zombie companies, zombie stocks, zombie ETFs, and you can hear why in those videos. And then also there might be opportunities, laggards to leaders, based on the January effect, so you can listen to how the January effect works via the video in the notes as well as on our YouTube page. So let me grab a drink a second. We'll jump over to our Google Sheet and look at our shopping list, see if there's anything interesting there. So here's all the stocks we currently have on our shopping list. Again, some of these are here because in the past they've had irrational reactions to earnings, like IBM, Bud, Cody, etc. Others we just like. We're looking for a dip in Disney back down to the 85 below 80 level. We might sell puts. We might buy shares. Uranium, DNN's one we watch. We watch JEPI and JEPQ, dividend payers that we keep an eye on. Some REITs, again, Land, LTC, Stag, also Uranium, USOI, some of the techs, Microsoft, Amazon, etc. So we could see, if there's any outsized opportunities in any of those. So, and again, I just, can now quickly flip over to our shopping list during the day, see if anybody's irrationally, down, and then see if they're near the price I want to buy at and what kind of risk reward profile they're showing. And then we can take advantage of those, again, a quick and easy way using our Google Sheet now. Okay. So now we'll look at our dividend payers. So if there's any dividend payers, if I have a couple additions, we'll look at our dividend payers Google Sheet. Again, we use our dividend payers Google Sheet to identify additional opportunities to generate income while we're waiting for our swing trading stocks to set up. And again, you can use this dividend payers Google Sheet to generate your own schedule of collecting dividends. We've recently added some features so you can take advantage of both price appreciation and dividend yield. So you can choose the risk reward profile and the type of dividend opportunities that you're looking for with this Google Sheet, and you can get access to this Google Sheet as well as our ETFs and our puts ROIC by joining our Patreon at the All Access or VIP level. So a couple that I've added to our dividend payers for this week that I want to take a quick look at is two that were shared by the ETF, by a video by the ETF guide. One is SCHY, which is the Schwab International Dividend Equity. These are both focused on international dividend yield. So there's SCHY, which is the Schwab, and there's BYMI. So I want to look at the risk reward profiles of those as I put those in our dividend payers Google Sheet, and then we'll compare that to another global dividend payer, which is SDIV. Just full disclosure, we have had a position in SDIV for a long time. That used to be the one people tended towards in terms of international dividend payers. So I thought it'd be interesting to compare these two new ones with SDIV, see which one we might want to use for international dividend payers going forward. So now in the Add tab, if we look at SCHY, which is the Schwab version, we can see it pays a 69-cent, looks like semi-annually. Let's see what kind of performance it's had. So it's had a positive 6% performance. So it's got a nominal yield of 4%, gives a net yield with our new calculation, taking into account price appreciation and nominal yield. So you can see the risk reward profiles, only 1.13. Both I've used the 52 week. I think both of these are relatively new. I could jump over and look at their FinViz chart real quickly. So you can see it's pretty high right now. So see it is optional, 4%. See the performance for the year is about 6.3. See it last paid us almost 69 cents on December 6th. So again, relatively high right now. And again, it hasn't been around, super long time. We can compare that to BYMI. So it's got a nominal yield, paid an 86-cent dividend, so 4.6%. Look at its risk reward profile. It's only got 1.14, so very similar. It does have a longer term risk reward profile that's a little more attractive. Performance a little bit better, 6.6%. So that gives us a net yield of 11%. So again, a little bit better than the SCHY. We can look at its chart in FinViz. Again, pretty high. Looks like it's oscillating around that resistance point right now. Again, relatively high right now. And doesn't have a lot of range longer term. So the bottom to top risk reward, it's still pretty good because it has a lower bottom probably. So let's compare those two to SDIV. So we'll go to our main page and we'll look at SDIV. Again, these are showing a net yield of about 10 and 11%. So we can search for SDIV. Bring up the chart for SDIV. So this is the Global X Super Dividend ETF. So we see it's not quite as high. Yeah, we've held this for quite a long time. Frankly, we've been a little disappointed with the performance. It's been much higher in the past. So if we look at the yields for it, you see it pays 21 cents monthly right now. You can see its performance. Yearly performance has been negative 15% for the year. So again, its price performance has been poor for the past year. So the nominal yield of 11.8% ends up being negative because of that poor price performance. So as you can see, we've added SCHY there, and I believe I added the V1 as well. Yeah, BYMI. So as we collect that data, those will get filled in our dividend payers as well. And again, seems to outperform SDIV. So going forward in the future for international dividend payers, we'll probably be looking at, SCHY or BYMI to invest in international dividend payers, which is what we use to give us international exposure, collect dividends. So again, these seem to be more attractive than, again, the old SDIV, which seemed to be what people typically use for international exposure with dividend payers. So again, thank you to the ETF guide for pointing those out. And in the future, again, we'll be looking at either SCHY or BYMI for international exposure relative to dividend payers. And they're added to our main dividend payer sheet. So you can track those as well and pick the one that fits your desires, income desires, risk reward profile, etc. And again, we hope that all helps. So if anyone else has any other dividend payers you'd like us to look at specifically, if you could throw those up in the chat. If I missed your ticker before, I apologize, and please throw that up there. Welcome, Ellen Krantz. Thank you for joining us. Hope you're doing well. And I'll try to take a quick look at those. Okay, I think someone mentioned AGNC. Here's AGNC. This is a REIT, mortgage-backed REIT. I'm not real hip on mortgage-backed REITs, but you can see, it's showing a net yield of 9% monthly. Looks like a 12-cent dividend. You can see, it's got good risk reward. So again, I'm personally staying away from mortgage-backed REITs because I think there's a risk of defaults. So again, but if that's interesting, you could see what the risk reward profile is, what the performance is. Again, net yield's about 9%, so it's positive. It's not bad. See the ones that are green. FAZ only pays a small dividend. It's a leveraged ETF. I'm not looking at that for a long-term dividend. This GLT, I believe, is losing money. Hershey, we've been kind of keeping an eye on. It went up, so it's above where I'd like the support level. Talked about JEPI, JEPQ. They're both kind of high right now. But if we got a irrational dip in one of the markets, so we like JEPI and JEPQ. Talked about land. I'd like that a little bit cheaper. Again, we buy that for price appreciation, although it's declined significantly for this year. But short-term price appreciation swing trades. That's we traded that profitably numerous times in the past. We don't like MPW. They've got, legal issues, financial issues. I saw some people commenting on that. I guess it had a little bit of a run up sometime last week, but we're staying away from that due to its issues. Again, kind of high right now. Did dip down a little bit, but I'd like that significantly cheaper. Again, dividend aristocrat. We looked at an update, I think it was last week, on OARC, so you can see those previous videos on OARC. We want to look at APLY and Tesla Q. So here's the risk reward profile on APLY. You can see it pays a 56-cent monthly dividend. See, it's got a nice net yield. I look at the chart. We looked at the chart for APLY with both of these TSLY and APLY. You see how these have a tendency to run up and then they drop off, but the long-term trend is downward. So there's some, duration deterioration going on in these yield max ETFs. You can see, it popped up in my screeners because it was close to a double bottom on its ex-dividend date and then bounced up a little bit. So I would look to, buy at one of these bottoms, hold it up to a top resistance level, and then sell it. I wouldn't want to hold this for a long period of time again, as they appear to have some deterioration. If I also look at TSLY similarly, again, we see a longer term downtrend, long-term, downtrend deterioration. So again, I'm looking at both of these yield max ETFs, for a short-term price appreciation swing, plus, collect a month or so of their juicy dividend. But again, right now, I'm not interested or willing to hold these for a long period of time due to that downtrending deterioration. So if I look at TSLY in our dividend payers, we see, it's pretty close to support right now, so it looks, pretty attractive. Got good risk reward currently. It's not quite my, factor of 2. See, it pays a 56-cent monthly dividend. See, the net yield's very high, so it's got nice price appreciation. So very high yield. But again, I would swing trade, scalp these over a very short time period. But this one's, looking pretty attractive. Again, it doesn't track Tesla perfectly, so Tesla wasn't showing really at bottom. But the TSLY is very close to its 52-week low. So there's, again, some deterioration. That's why I want to use the Tesla price to determine the entry point into this TSLY. Use Apple as the entry point into APLY. Just checking the chat. If I missed your ticker again, I apologize. If you throw it back up, I'll leave our dividend payers up for a few minutes, and we can always jump back and look at that. Do want to just quickly cover our options. Again, we also use some option strategies, selling covered calls against our positions when they're going up, buy them back when they're going down, sell puts when something's going down that we might want to own, buy them back when it's going back up. And we use our puts ROIC Google Sheet to help us identify opportunities to buy or sell puts. And again, you can get access to this puts ROIC Google Sheet to help you also identify opportunities to sell and buy back puts by joining our Patreon at the all access or VIP levels. So just a couple updates and additions. I rolled the January 24s to February 24 expirations, and I also added Palantir at the $10 strike to the research tab, so we'll look at that one. So you can see I added Palantir. It popped up in the options seller ROI tool, which you can access via the tool sheet. So that was a new one that popped up. I thought you might want to collect the data on. You can see the premiums aren't all that attractive. Again, I've got a $10 strike price, which is reasonably low. We'll see if the you can see the 52-week high is decent. So if it were to appreciate some, that might be an attractive put to sell. Again, Palantir now seems like they're making money, so I might be willing to sell puts. And if we got assigned, play the wheel strategy with Palantir. Other than that, again, the VIX is still pretty low. Premiums are still pretty low in our main watch list. You can see there isn't really a whole lot of ROIC. That's, nothing close to 5% that we're terribly interested in. You can see some of our sell prices, and there's a few that might, Disney's one that might be interesting if it declined, TQQQ, I'm not all that hip on longer term puts on the leveraged ETFs, but those are a couple that might have a decent ROI if they did decline further. Similarly, in the research tab, you can see a few of them are starting to get a little bit attractive. ROIC is still pretty low, but if they did decline further, let's see, a couple of them. Now, some of these I have longer term expirations on. So Match, I have a January 2025 expiration. That might appreciate and become interesting. Also PayPal at 50, if it increases, but right now it's pretty low. Also United Airlines, I've got a January 2025. If it appreciates, that could also become interesting. So again, you can use this to track puts, opportunities to sell or buy back puts. Again, this gets updated at the end of each day. We collect the options information, etc., and update this, and then go see if there's opportunities to sell or buy back puts. Okay. Grab a quick drink. I had a question from Forrest Gumbo 1183, asked to take a look at AQST, and I was going to use that as a part of a case study to look at some additional discussion on our series on how to trade biotech stocks for beginners. So we've had this ongoing discussion, this ongoing series on how to trade biotech stocks for beginners. I'm not going to have time today to go into all my notes on how to calculate the quarter's cash flow positive. You can see my notes on how to calculate the quarter's cash flow positive for these biotechs in the notes, and probably next week or in subsequent weeks I'll try to go over that discussion about how do you calculate quarter's cash flow positive and why that's important for biotechs. And maybe if you all are interested, please let me know in the comments or in our Discord if you think it's worth producing another Google sheet that you could use to do these calculations to calculate the quarter's cash flow positive for a biotech or really any stock, but it's particularly important, in my humble opinion, for biotech. So again, I'm not going to have time to go over that calculation now, but if you put in the comments or in our Discord if that would be worthwhile building a Google sheet to do that, that would help me know if it's worth the time and effort to do so. So I do want to look at this AQST very briefly, and Easy Mike asks to look at ALT. Both of these are biotech. So again, potential case studies to go through that calculation on. I'll try to quickly look at those too, but let me grab a drink a second. Okay, firstly, this AQST. So this is Acquisitive Therapeutics. You can see it's pretty high. So it had a nice run up into that resistance, got rejected. Looks like it's bouncing. So it looks pretty positive. If we zoom out a little bit, so this looks like it's broken out from its previous high. It's got some room up into that longer term moving average, got plenty of upside in the past. So it looks like it's on a nice uptrend, so it's doing pretty well. Again, most biotechs generally lose money, so that's why it's important to know, how much cash do they have. One of the things I always look at is their cash per share, although that's going to deteriorate. Looks like positive sentiment. Looks like they don't have an outstanding offering that we can see. Looks like the analysts like it. Had a 633 target price. So again, it's at near its 52-week high. Look at what do they do? So they develop, commercialize unmet medical needs, therapeutics. So just a note, again, we'll probably talk about this again more next week and subsequent weeks, but you'll see in that calculation of quarters cash flow positive, some of the information that you input you can find here on FinViz in their financial statements. So you see their cash and short-term investments, etc. So you can find the values for those inputs in the financial statements at the bottom of FinViz. Again, we expect most biotechs lose a lot of money. They don't generally have a lot of income. So yeah, they're burning cash. So it's again important to know, how many quarters are they going to have before they run out of cash. You can see if we can see their pipeline. Let me see what this run up has been due to. So phase 3 trial. Okay, so they dosed first patient in a phase 3. So again, these are all catalysts when they start a phase. Obviously, the later phases are more positive. So all of those are catalysts that will then cause, pop up in the stock. Then the question is, how well do they hold these pops? So that was in November, and we got, that was in December. So it's probably had a run up, since December, since that catalyst. So as I pointed out when we looked at that BIVI, typically I'm looking in these biotech stocks for their pipeline. So here we can see their site. First place I'd go is their pipeline. How many drugs do they have in development and in what phase? What are their what diseases? What target? So they've got seizures, anaphylaxis. This is clinical, so they're in trials, clinical trials with a couple things. They got some FDA approvals, so that's very positive. So they've had some success. So yeah, this guy looks pretty good. Right now, looks like they've only got 2 in clinical trials, and they've got some tentative approval granted. So yeah, this AQST looks pretty positive. Again, I'd want to, dig into more details about each of those. Look at their cash burn, etc. See what risk of dilution. But again, this looks pretty good. It's a little high right now. Might get a retracement. It might be attractive to pick up on a retracement, a rejection off that resistance. But this AQST looks like a pretty attractive biotech. In general, again, it's important to understand their cash position, risk of dilution, etc. And typically, in this current environment, I stay away from big money losers. But again, as biotechs go, from this very quick look at it, it looks pretty attractive. So let me look at ALT for Easy Mike, Altimmune. So it looks very similar. Boy, it had an exuberant run recently. So let's see what caused that exuberant run. Again, losing money. Doesn't have a lot of debt, which is good. Doesn't look like there's offerings outstanding. Target price 22, so it's got some room. So phase 2 obesity, so it looks like an obesity drug, so that explains this phase 2 obesity trial. So again, the GLP-1s, so that would account for this, exuberant run. So it's, on the hype of the GLP-1, the obesity drugs. So yeah, very positive, but again, very high right now. It's got room. In the past, it's been up in the 23s. So again, it's still got a potential double. So on any kind of correction, retracement might be attractive. Again, I'd want to know what their cash position is, etc. We'll look at their pipeline very quickly. So again, most of these biotechs, you can find a pipeline tab very quickly. So obesity and liver diseases. Liver disease is another one that cyclically goes through hype cycles. So you can see they're in the end of phase 2, phase 2B, top line Q1 24, chronic HBV. So they got another catalyst in Q1. So again, that's positive. They've got, one in phase 2, one in phase 2B. So yeah, that one's headed to phase 3. So again, not a lot of shots on goal, but several, and some pretty significant markets. Obesity, NASH. Again, NASH is another liver disease that has a lot of attention from time to time. So yeah, Alt-Z looks pretty good. It's just, I wouldn't chase it at this point. Wait for a pullback. And again, I would evaluate their cash position, see if they're going to have to raise cash, dilute, to complete those clinical trials, get this commercialized. And again, on any failure, there's a very high risk at this point. It could drop, back down to these 2 levels on any failure or issue in their trial. So definitely have your risk management in place. So I hope that all helps. So again, I was hoping to discuss more about the biotechs, but I hope that helps. And again, let me know if you'd like. You can look at these formulas that I've dredged out of my old code as to how I calculated quarters cash flow positive. And hopefully in the near future, we'll be able to go over that in more detail and use some of these as some case studies to identify, how long do they have before they're going to run out of cash, do offerings, further dilution, which is the risk. And you could see how I have in the past scored those to filter out ones that were, again, at risk of a near-term offering or, going bankrupt, going out of business because they run out of cash. So again, which is always a risk with these biotechs. They need a lot of cash to go through these trials. If they can't start generating money commercializing a product, they need to either be acquired or they need to dilute and further offerings, which again puts your share price at risk. So I hope that all helps. And if you have any other questions, comments, recommendations for improvement, please put those in the comments in our Discord. Our Discord's free to join. You have access to all the channels with the exception of the few Patreon-only channels that I pointed out. Just a quick reminder, markets are closed on Monday in observance of Martin Luther King Day. So we'll see you all again on the trade floor on Tuesday. Again, we can continue these discussions 24/7 in our Discord. So I'd encourage you all to join our Discord. Let's keep the discussions going. And again, you can find a free link to our Discord in the description box below, also on our homepage in the link section. Our homepage is beachbumtrading.com, bum without the U. So again, you can also find links to all of our social media profiles there. So if you have questions, comments, recommendations for further stocks to look at, etc., you can contact us via any of these mechanisms, and we'll try to respond as soon as we're able. We hope you like this content. We hope you'll smash the like button, and also we hope you're subscribed and click the bell icon and get all notifications so you're notified as we release further videos, which we do pretty much every day. We release something or try to. So again, also please share our content with your fellow BeachBum traders around the world and friends. We really need the community's help to continue to grow the community. As you can see, we've got a great group of traders in our chats and our Discord, helping each other out, sharing trading ideas, and we want to keep growing that community, and we need your help to continue to do so. And we'd love to hear your suggestions for, what can we do to improve our videos, our weekly trading game plans, our Google Sheets, our community, to add more value for all of you, our fellow BeachBum traders. So please let us know, and we will do what we can to continue to add value and grow our community. So again, markets closed on Monday, so we'll see you all on Tuesday on the trade floor. And again, we hope to see you back next weekend for our weekly trading game plan for the following week. Again, we hope this all helps. Please let us know what you think of all of this, and we look forward to it. And good luck and have a great trading week.